Meanwhile, President Trump has had a busy first 3 weeks in office, announcing increased tariffs and a massive deportation plan, restructuring government departments, and making investments in energy and AI. And while markets seem to be initially optimistic about his policies, what will the long-term impact be? Let's ask former PIMCO chief economist Paul McCulley. He is also an adjunct professor at Georgetown McDonough School of Business. Professor McCulley, great to have you with us.
Good to be with you, Melissa.
I like how you explained the concept of risk versus uncertainty, because I feel investors right now are facing uncertainty as opposed to risk.
Yeah, I think that's very much right. In fact, I teach my students this all the time. And risk is calculating the odds in a game where you know the parameters and you know the rules. You may win or lose, but you know the rules, so you're taking defined risk. Where uncertainty is when you are playing a game and you don't know the parameters. You don't know the rules. The rules are in flux. And actually, you respond as an investor, as a human being, differently to risk than you do to uncertainty. You keep playing if all you're doing is managing risk. But when you face uncertainty, you don't know what the rules are, then you tend to pull back. So actually, from the standpoint of the economy, there's more downside risk from uncertainty about the rules as opposed to simply risk within the context of definable rules.
Let's say, for instance, this period of uncertainty lasts for, 6 months. It could be longer, it could be shorter. But as an economist, how do you sort of factor that into your projections for the economy, for spending, for inflation, et cetera?
Well, I think you naturally start with a baseline, and that's obviously what the Federal Reserve does. And a baseline will tend to extrapolate from where you've been, adjusting for this, that, and the other. But fundamentally, the object in motion continues. And from that standpoint, it's actually, we're in a good place. In fact, Chair Powell said that many times today. We're in a good place on the economy from the standpoint of the dual mandate. Unemployment at 4, inflation with a 2 handle. We're in a good place there. The Fed's in a good place with the policy rate having recalibrated 100 basis points down to 4 3/8, which is not necessarily neutral, but pretty close. So essentially, you logically forecast that the economy will continue humming along and the Fed's going to hang out in the right neighborhood. So that becomes your base case forecast. And then you're just looking for all of the wild cards with respect to the parameters of the game. And I think that's what the Fed will be doing as well. I mean, fortunately, they did the recalibration and they're in a good place right now. So effectively, they are well positioned, as Chair Powell likes to say, to respond whether or not the uncertainty clears up or the uncertainty becomes more nefarious. So that's the essence of how you are forecasting. It takes humility, but also for the Fed, they're in a really good starting point. So essentially, if Mr. Trump doesn't kick this economy out of sync with reality, then the economy should perform pretty well.
Love the optimism, Paul. Love the flow as well. So I guess you would then think the moving yields since September higher is on the back of an economy that's doing better. But is there a point where rates get too high, in your opinion?
By definition, there has to be, because we're starting from a very, very flat yield curve. And if, for whatever reason, uncertainty being predominant, particularly on tariffs, which have a stagflationary smell to them, if you go down that path, you'll get a bear steeping of the yield curve. And then that would raise a major question about valuations across a whole bunch of assets and could turn animal spirits negative. So that's what I'm focusing in on there. It's not a particular level. I mean, I think we're probably going to be for the 10-year 4.25 to 4 3/4 for the next 6 months or so. But if you move to a level that effectively leads animal spirits to turn down and you see a big correction in financial conditions to the restrictive side, then it becomes problematic.